Hello guys, today we say about what determines Bitcoin's price. Bitcoin is a cryptocurrency development by Satoshi Nakamoto. The name given to its unknown creator. Transactions are recorded in a blockchain which shows the transactions history for each until and proves ownership. Unlike traditional currencies, Bitcoin is not used by a control bank or backed by a government. For investors, buying a Bitcoins is different from purchasing a stock or bond because Bitcoin is not a corporation. Consequently, there are no corporate balance sheets or from tanks to review, no fund performance to compare, or their transactions tools for choosing an investment. Learn that influences Bitcoin price so that you can make more informed decisions about choosing it is an investment. Key takeaways. Purchasing stock grants you ownership in a company, whereas buying Bitcoin grants you ownership of however much cryptocurrency your money buys. Bitcoin is neither issued nor regulated by a central government and therefore is not subject to governmental monetary policies. Bitcoin price is primarily affected by its supply, the market demand for it, availability, competed cryptocurrencies, and investor sentiment. Bitcoin supply is limited. There is a finite number of Bitcoin, and the final coins are projected to be mined in 2140. What determines Bitcoin price? Bitcoin is not issued by a central bank or backed by a government. Therefore, the monetary policy tools inflation rates and economic growth measurements that typically influence the value of a currency do not apply to Bitcoin. Bitcoin acts as more of a commodity being used to store value, so the following factors influence its price. The supply of Bitcoin and the market's demand for it. The cost of producing a Bitcoin through the mining process. The rewards issued to Bitcoin miners for verifying transactions to the blockchain. The number of competing cryptocurrencies. Regulations governing its sale and use. The state of its internal governance, development, and community needs. Effects of supply of Bitcoin price. The supply of an asset plays a vital role in determining its price. A scarce asset is more likely to have high price, whereas one available in plenty will have low prices. Bitcoin supply is generally less publicized as there will only ever be 21 million produced and only a specific amount created per year. Its protocol only allows new bitcoins to be created at a fixed rate, and that rate is designated to slow down over time. Bitcoin's future supply is therefore dwindling with adds to demand. This is similar to a reductions in corn supply. If harvests were to be reduced every 4 years until no more was harvested, and it was publicly advised that it would happen, corn prices would skyrocket. Bitcoin's price and demand. Bitcoin has attracted the attentions of retail and institutional investors, increasing demand fueled by an increase in media coverage and investing experts and business owners touting the value Bitcoin has and will have. Bitcoin has also become popular in countries with high inflations and developed currencies such as Venezuela. Additionally, it is popular with those who use it to transfer large sums of money for legally and illegal activities. This means that shrinkage in future supply has coupled with a surge in demand to fuel a rise in Bitcoin's price. However, its price still fluctuates in alternating periods of booms and busts. For example, a run up in Bitcoin price was by a prolonged low than two sharp increases and downticks source 20-21 years. Production costs and Bitcoin price. Like other commodities, production costs play an essential role in determining Bitcoin's price. According to some research, Bitcoin price in crypto markets is close relations to its marginal cost of production. For Bitcoin, the production cost is roughly the same of the directly fixed costs for infrastructure and electricity required to mine the cryptocurrency, and an indirect cost relations to the difficulty level of its algorithms. Bitcoin mining cost consists of a network of miners competing to solve for an encrypted number. The first miner to do so wins a reward of newly mined bitcoins and any transactions fees accumulated since the last block was found. Solving the hash to open a block and earn a reward requires brute force in the form of considerable processing power. In monetary terms, the miner will have to buy many expensive mining machines. The Bitcoin mining process also requires costly electricity bills. According to estimates, electricity consumers for the Bitcoin mining network equals more than that of some small countries. How compilation affects Bitcoin's price? Source Bitcoin is the most well-known cryptocurrency. Hundreds of other tokens are vying for investment dollars. As of 2022, years, Bitcoin diminishes trading in cryptocurrency markets. The main reason for this was increased awareness of and capabilities for alternative coins. For example, Ethereum has emerged as a formidable completion to Bitcoin because of a boom in decentralized finance. Investors who see its potential in reinventing the rise of modern financial infrastructure have invested in Azure. The cryptocurrency used as gas for transaction on its network. Other cryptocurrencies that continue to be introduced have surged in popularity. Tether, BNB, USDT coin, and Solana, with other coins taking market capacity away from Bitcoin. Even though they have siphoned some away investment dollars from the Bitcoin ecosystem, competition has attracted investors to Bitcoin. As a result, demand and awareness about cryptocurrency have increased. Okay, bye bye guys.